This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, May 23rd, 2016. Euro dollar. So the euro has come back under pressure in recent trade, with the market taking out some key support at 112.17. At this point, we've seen the market teetering along that 12.17 area, and it's going to be interesting to see if the market can now establish below 112.17 to open the door for the next major downside extension back towards the 110 area. At this point, any rally should be very well capped ahead of 114, with only a break ultimately back above 116.17 to compromise this newly adopted bearish outlook for the euro. But again, it's going to be important to see if the market can establish a below 112.17 to really strengthen the bearish outlook and accelerate declines. Inability to close below 112.17 will suggest more choppy trade and another potential bounce. Sterling dollar. So cable is stalled out yet again on rallies up towards some key resistance in the 147 area, and overall the pressure remains on the downside, with deeper setbacks potentially seen back down towards the 141 to 143 area. At this point, the rally could be extending if we see a break back above 146.70 and that key high at 147.70 further up. But again, until then, the structure favors the downside. There is this possible major base that's in the process of forming, but again, we need to see a break back above 147.70 to suggest that there's a structural shift in this market, and until then, the pressure remains on the downside. Dollar yen. So dollar yen has seen a nice little correction in recent trade out from those multi-month lows at 105.55, but the market is now looking to put in a lower top within this broader downtrend ahead of the next major downside extension. Only a break back above 111.89 would compromise the bearish outlook for dollar yen. Euro Swiss. So Euro Swiss continues to track higher with this latest push above 111, opening the door for a retest of the recent multi-month and yearly high at 112 further up. At this point, look for setbacks to be very well supported ahead of 109. Aussie dollar. So Aussie is seeing a bit of a bounce after breaking down below the 200-day moving average, but any rally should be very well capped here in favor of additional declines that take us down towards next key support in the form of the psychological barrier at 70. Look for any rallies to now be very well capped ahead of 74. Dollar CAD. So dollar CAD has seen a constructive shift over the past several days, with the market now looking like it's basing out off that 2016 multi-month low at 124.61. Look for a pushback above next key resistance at 132.19 to strengthen this outlook and accelerate gains. Kiwi dollar. So Kiwi has seen some rallies in recent trade out from those lows that we saw down at 67.10, though any rallies are expected to continue to be very well capped, with the broader outlook favoring this market lower. At this point, a drop back below 67.10, that low from the previous week, will accelerate declines towards next key support at 65.46. Any rally should be very well capped ahead of 70. SPX 500. So the S&P 500 has been showing signs of a head and shoulders top formation after stalling out above 2100. Look for a break below 2021 to strengthen and trigger this outlook and open the door for an acceleration down towards initial support in the 1930 area. Below there would expose a retest of that 2016 low at 1808. At this point, only back above 2112, the yearly high, would compromise this outlook. Gold. So gold has pulled back in recent trade after stalling just shy of the 2015 peak at 1307. Still, the market has taken a shift to the constructive side, and any setbacks should be very well supported in favor of an eventual break above that 1307 2015 high and towards 1400 further up. Only back below 1190 would compromise the constructive outlook for gold.